Hi, welcome to this podcast where I'm going to be looking at partnerships and what goes in the statements of financial position. Okay, so we've already done the appropriation account. We've already looked at something called the current account. Partnerships are slightly different to limited companies insofar as they also have a partner's capital account. Now, both the capital account and the current account do contain officially capital, but the current account's to do with profits earned and money withdrawn from the business, whereas the capital account is to do with the long-term investment in a business. And IGCSE, it's relatively straightforward because you don't need to understand about the changes to the capital account. So you'll just be given some balances brought forward, and quite literally they will become balances carried forward. And so they would just balance off an account like normal, nothing different on that to what we normally do. And what's important is the partners don't withdraw from the capital account because that's the money that's been invested initially to start the business off, and that will have been invested in the non-current assets of the video of the business. Okay, typical partnerships question might ask you to do the statement of financial position. Here we've got a load of information, and we need to do the statement of financial position. A large chunk of it is exactly the same as we've already seen. So what you can already see up here is the non-current assets and the current assets. We're going to do what we've always done. And then we've also got down here the current liabilities and any non-current liabilities. That doesn't change. Okay. The only thing that does change is we need to find out what the balances are on the current account. And then for this question here, we've also had to put in, do a quick depreciation calculation. So as I've always said to my students, you can't get away from depreciation at IGCSE. So what we're going to do about the current accounts, well, we do know from the information provided that RIA's got a 1,200 debit balance. So we need to put that in. That's her opening balance brought forward. And we know that Shahad has a credit balance of 2,000. So we put that into the accounts. This is exactly what we did last time. Okay, and now what we need to do is to work out what's going to happen about all this profit share stuff. So I'm going to use a profit that we're told this company has made of 23,000. And the first thing I'm going to do is take off Shahad's salary, because that's being given to her as part of her profit share for doing probably more work in the business than Ria does. Okay, that leaves me with an amount available for distribution because we don't need to have interest on drawings or interest on capital or any of the other ways of appropriating the capital that we've looked at. And then I know the profit share ratio is 2-1. So what I would have done is divide this by 3, because if I had 2 and 1 together, I get 3. That gives me one share is 6,000, and that's what Shahad's going to get. So Shahad's not doing particularly well in this business because Ria doesn't only get a salary, but she also gets a bigger profit share, and then Ria gets 2 shares. Okay, and then what I do, shares of profits that they are owed. So for example, the salary for Shahad goes in on the credit side because it's increasing what the business owes her, and the 2 profit share ratios go in. Okay, that's got to be the bigger side, the credit side, we already know that. And then looking down here somewhere, I should have some drawings, 9,000 and 11,000. So I put in my drawings exactly as per normal. If I know my credit side is bigger than my debit side, I need to make the debit side bigger. And then we have a balance carry forward. And I'm doing this as workings on purpose because for the sakes of this question, it doesn't say that I need to do a current account. But if I know to do a current account, that's the easiest way to do the workings. And then what I've got is the information to start providing my statement of financial position. Okay, if we look at our fixtures and fittings, when we know they were worth 20,000, we know that we had 8,000 in the trial balance of depreciation, but that doesn't include this year's depreciation. So this year's depreciation must have been 20,000 times 20%, which is 4,000. So I've made the depreciation 12,000 rather than 8,000. Land's not getting depreciated, that's quite common. So the total of my non-current assets are 12,500. I've got trade receivables and other receivables need to go in, and also my inventory. But this business has a bank overdraft, I think, or I might not have put a bank figure in. Okay, yeah, by the power of magic, I have now recreated the cash, and the overdraft has gone in of 1,500 in the liabilities. Okay, and then what I now do, so we've now got the total of my assets. What I now need to do is to do the capital section. This is a bit that's new to you. So I know that the capital accounts haven't changed, and we've got 7,500 for Ria and 5,000 for Shahad. Okay, and now what I need to do is look at my balances carried forward. And I use the balances carried forward on my current accounts to go in and calculate or put in the current account balances. So I've got 4,000 there, a loan of 10,000. Current liabilities, including the overdraft, is 4,500, and the accounts balance. You will see this laid out a slightly different way sometimes on mark schemes, particularly if the current accounts are relatively simple. And what you will see laid out is actually a summary of what has happened to the current account. So instead of doing the T accounts as workings, you put the balance brought forward, the balance salary, which gets added on, the profit shares, which get added on, and then the drawings, which get taken out. And that still gives you exactly the same closing balance. To a degree, it's your choice. If they don't specifically say in an exam question that you have to show the current account, you can choose either to show the workings in the statement of financial position, or personally, what I would do, I would still show the workings in the T account, because if you know to do it, you might as well do it a way that you've got to know how to do it, and then just put the totals into the current account. But either way, you need to show your workings. And as you would expect, what I've done for you is a couple of student questions, or just one student question, which I'd like anybody that I teach to do and then to send back to me. Thank you very much for listening, and hopefully the little bit of magic where I did correct the question in the middle doesn't affect your enjoyment of this fantastic video. See you all soon. Bye-bye.